Okay, the final episode of the long-term perspective before we get into the intermediate-term perspective, quarterly shifts and seasonal tendencies. Quarterly shifts and seasonal tendencies are to be used together with all the previous LTP lessons. There must be a lot of importance placed on that because index futures are a perma bull market on the higher time frame. So you can't just go look at the data, see that a month is bearish, okay, and then just start looking for shorts and try to build the narrative around that. No, there's a reason, okay, I put quarterly shifts and seasonal tendencies as the last episode, okay? That was not random. If this was Forex, it would be the first episode, okay? Very, very different on index futures because it's an underlyingly perma bull market. So here is the seasonality of the past 5 years on the index futures. And from the data, okay, there's a clear discrepancy here between February and September. They have clear bearish price action on these 2 months, right? We have a semi-bullish January, semi-bullish March, very, very small bullish April, right? May, June, July, extremely bullish. Very, very slightly bullish August, September bearish, October slightly bullish, November extremely bullish, and December slightly bullish, right? So, like I said, according to the data, 2 clear months with the bearish seasonal tendency, February and September. We use this data by blending it with all the above high time frame lessons. When blended together, they are extremely impactful and create very high probability scenarios on the higher time frame. One on its own is meaningless and will get you wrecked. Using quarterly shifts or seasonal tendencies on their own will get you wrecked. Using candle closures on its own will get you wrecked. Using any of the higher time frame lessons on their own without the blend of all of them together is gonna get you wrecked, okay? But when you use them together, it's incredibly high probability. Okay, so looking at the narrative here, okay, premium discount low, premium high. We take out an old high, relative equal lows, and a bullish for value gap below us. We then go above this old high. We then get SMT with NVIDIA here. Now, why do I use NVIDIA for SMT, right? You can use the top 3 stocks on NASDAQ, okay, for SMT. Now, the top 3 stocks are impactful because what is the NASDAQ? The NASDAQ is a composite of the top 100 US tech-based stocks. And NVIDIA currently, and for the past last year, has been outperforming the other stocks by incredible margins, right? So it's the most impactful on the NASDAQ as of now. That could change, right? You'd have to keep an eye on that. So NVIDIA has SMT here. You can see February's high getting taken out here and this failing to take out the previous candle's high here, right? So you can see here, this is NVIDIA, okay? We take out this candle's high here. We fail to do so, okay, on the NASDAQ. So there's SMT here, and then there's also SMT with February. Now this is February's candle, right? According to the data, February's candle was bearish, which it did end up happening. Why? We're in a premium, okay? We have gone above an old high. There's relative equal lows below us. There's the fair value gap, and then we get SMT at the highs. We then get candle closure within this one candle, right? And we keep closing within it here as we reach February. So when we're blending them all together, then the seasonal tendency becomes impactful and the move is usually larger. If you look at March and if you look at the seasonal tendency, March was a semi-bullish seasonal tendency. It's massively bearish, right? So if you were to use the seasonal tendency on its own and think you could be bullish here in this month, you'd just be destroyed the entire month, right? So that's why you need to blend them together, right? On February, we have a previous month high raid. That's right here. We run up above that premium previous month high. We then confirm the highest up close candle with the close below here. Trades back into the up close candle. We have a bearish bias on the seasonal tendency, as well as all of the key price action signatures indicating that we should follow in line with the higher time frame seasonal tendency. We then confirm this new day opening gap as an inverse with the close below here, trade back up into it, expand lower, fair value gap, trade up into that. Then all the key levels on the way down are holding price lower for the month of February and March, okay? Let's go back to that seasonal tendency, right? April is semi-bullish, okay? May, June, July are all extremely bullish. So look at the chart now here. It becomes impactful when we're blending it, right? So we're now in a discount, okay? Discount key level, inducement for the key level. April was semi-bullish. Now this is a bullish reversal candle, which means it started off extremely bearish before closing bullish, right? So it was semi-bullish, right? Makes sense because it traded into a discount higher time frame key level and below sell stops, right? We then wick below, right? This candle. May becomes very bullish. Is it very bullish? Yes. June, very bullish. July, very bullish until we reach the buy side liquidity, right? So this is how we can blend the seasonal tendencies and anticipate quarterly shifts here after months of price action.